Hello, my fellow non-viewers. We are going to talk a little bit of markets and we'll kind of see what's happened. I'll tell you what I'm doing with my portfolio and probably what you should not be doing with yours. So right now, this is the biggest correction that we've had for like a year, which is pathetic. People are freaking out, like quite literally freaking out, for my job, which I work for a big YouTuber, I am his research analyst. All I do is search through the media and the sentiment. So I really get a read on what the sentiment is in the market. But that's all I'm looking at all day. And the sentiment is terrible. I mean, anywhere you look in the mainstream media and on Twitter, everyone's saying there's so many risks for the market. All these short vol traders are going to get shaken out. It's going to be a massive correction or crash, and maybe, but I tend to think that the crowd is often wrong, if not always, and I do not see why this now would be different.
Josh, let me ask a quick follow-up question. I was thinking about that thing that we talked about that the other day, and I think there's a lot of wisdom in that, in terms of the market will always do whatever it can to humiliate the most amount of people or cause most amount of people to lose money, whichever way you want to say it. So I'm very much of the camp that you're going to see a deflationary bust before you see the inflationary boom. I think it's like a tsunami. The water.
You mean that asset prices, correct?
Yeah. So and asset price is very, very good, very good thing. But I also think it's important to note and call attention to the fact that you see this bearish, or at least I assume today was evidence of this bearish sentiment across the thing. I wonder if what's being set up is that you're going to see the bearish sentiment right now be turned on its head from the market going even further up. And once people get lured out into the ocean where the water's gone out, that's when the flip happens. Because at the same time, once people think that the market can no longer crash, if they think that if they are certain it's going to crash and it goes up, then all of a sudden the sentiment, the universal sentiment switches from being bearish to bullish. And that's, I think, maybe when the rug will get pulled out from underneath everyone. But anyways, that's very speculative.
That is quite exactly what I'm thinking. So we should probably scratch that idea and just do the opposite, because honestly, that's exactly kind of what I'm thinking right now. I was getting a little defensive, and now I'm really starting to get bullish again. But this is not for my longer term people. I'm looking out maximum 6 months. My time frame right now, I'm pretty much only buying options on shippers, long term uranium, some coal that I will probably sell in the near future, because coal it's starting to gap up, and Jim Rogers taught us some very wise wisdom. It's coal, you're still not going to see it in the media, but it looks like the Bitcoin chart before it corrected. It has just gone absolutely to the moon.
Yeah.
And I don't like that. Maybe it continues to do that, but I've already retained massive gains, and I am now looking to lock them in within the next few months.
So
what
Josh,
I'm really,
let me just one quick follow-up. So what I really hear you saying is you're still very much in commodities. You might be flipping and flopping between the various and shipping, but you're still going to be kind of flip-flopping amongst the commodities. For example, maybe you rotate out of coal, go more into uranium, whatever, right? But still, it's commodities and shipping are going to be the core thing that you're in right now.
That's all I'm in right now. I've recently gotten a lot more silver, well, and some deep value stocks, but I don't even look at those. Silver as well. Yeah, silver started to get unloved, and it got hammered the other day. So I decided to pick up some call options on First Majestic and some other company that I didn't even know what it was called before I looked it up. But it was a suggestion from my style is more so I look at the trends that are going on, and I find a sector that I like, and then I allocate my research in those specific sectors elsewhere. So I find the number one expert in silver, and then I'll see what their plays are, and then I'll find my top plays in there, or especially like uranium, anything. All my work is done elsewhere. I look at the macro view, and then I find someone to delegate that thinking to someone else, your own research analyst. Right now, I'm going heavy on shipping. We saw the bulk and dry bulk indexes have continued to go straight up. I mean, these companies are going to continue to take more and more money, but I was riding the trend all the way up. I recently sold everything, but we magically just got like a 40% correction in like 2 weeks. and these valuations look even better than when I bought them. So what do? You buy. And I would love to see, especially Zim, ZIM. This company prints money. That's all it does. I would not, earnings are coming out in a few weeks, and I would not be surprised to just see an absolute blow out of the water. And if it doesn't, I'd like to buy more, because I think over the long run, this company is going to do extremely well. And how do I find this company? From delegating my research to someone else. I like the sector, so I find the specialist in the sector that can do the work for me. Any feedback, Justin? So I've got options going 49 days out, like 100, anywhere from like 2 months to like 6 months. I own it.
And just to state the obvious, I suspect those are all calls. There's no puts in there.
Calls. Yeah, no. I would sell puts if I had a larger portfolio, but I'm not interested in holding that much of my capital in one position. If you're selling a put, I mean, you're going to need a I would want it to be completely collateralized, and that's going to be like a $5,000.
A lot.
Just hold up. Yeah, there's for like you'd get like 30%. It's just I don't think it's worth it for my size portfolio.
No, makes sense.
Especially when these things move, they're extremely volatile. They since they're so underfunded and they're making so much money, when they move, they just shoot right up, and their market caps are so small compared to what they're making. So they're extremely volatile to the upside and downside, but it makes for incredible trades.
Okay, gotcha. And of course, you get the extra leverage or the extra exposure to leverage by virtue of being in an option. So no, I get it. Makes sense. Yeah. Okay, well, I guess the only thing I've been keeping my ear to the ground on, although not really a lot seems to happen. It's one of those things where I think everyone thinks something's going to happen, so it probably won't happen. And as soon as people stop paying attention, then the entire thing blows up, and that's Evergrande.
Yeah. Honestly, that is. At first, it just seemed like everyone was talking about it, but I would say half the people that are talking about it forgot it even happened. And I think that's really interesting. There's no news. I don't know if there's a single news article on Evergrande anymore. It's just dead.
Yeah, I think the secret to Evergrande, and this is what I don't have a good answer to, but this is kind of what aligns or what orients my thinking is what is the relationship of Evergrande to the rest of the world, or to China and then China to the rest of the world, whichever way you want to articulate it. That's, I think, the key thing, and that's what I can't answer very clearly. So, anyways, I'm not going to ramble on now, but that's, if it's nothing, then who cares? If it's something, then it's like what? But anyways,
and that's why you own volatility. I am a massive proponent. So a trade that I've been loving lately, that has just been working incredibly. We've seen massive vol spikes followed by a complete tank in vol. So on the vol spikes, I sell my vol. On the tanks, I buy it back up. It's going to work until it doesn't. When it doesn't work, I would not be surprised if we overshoot to the upside or to the downside. Either way, I think I might make up for it with what I'm making right now, because without fail for the past few weeks, we've seen the VIX go from like 20 to 30, and you sell it at the top end of the range and you buy it at the bottom end of the range. And I have been absolutely loving that trade.
Well done. Well done. Actually, I'm this close too. If I wasn't traveling today, I would have picked up a few options on Zim. Maybe I'll pick those tomorrow.
I mean, I'm hoping tomorrow's an even better opportunity, and I'll be buying right up with you. My plan is, if Zim continues to go down, I'm gonna sell some of my other positions so I can load up some more Zim.
Interesting. And just to be clear, like, you're always going into options. You're not buying any of the underlying in this regard, right?
Not on an expensive stock like that. If I was say managing $1 million, my view would be a lot different. But for someone like me at a $50 stock, for me to retain gains, I need a lot of shares. But like, if I wanted the amount of shares for the percent gain that I'm looking for, then I'm just not going to make any money, or I'm going to be allocating 10% of my portfolio to that. So I'd much rather use options. You have the leverage and you have a defined risk.
Okay. No, makes sense on that front. So, well, perfect, Joshua. I think that's pretty much it.
Before we end this, I say we tell the crowd what we kind of have going on, or what you started with GME. So you're a much better storyteller than I. What in my GME trade?
Oh, right. So
let's explain your thinking behind.
So the thinking boils down to this: is it's not so much a trade in terms of is GME profitable or not, or is it a going concern? I think that it is, but let's just set that aside for 1 second. I think the trade or what makes this particularly attractive is my suspicion is the short interest of GMI is grossly underreported. And this has been done by various irregularities in the people in the market who have the privilege to sell shares short. Basically, they know how to be very creative in not disclosing and pumping this stuff in. Anyways, sooner or later, the chickens will come home to roost. And when they do come home to roost, it'll be very, very fascinating. What's going on right now in GME land is you have this massive push for people to directly register their shares. So just a quick side note to put some numbers on this. Out of the 75 million shares that GME has officially issued, about 25 million are locked up with insiders or whatever, and they can't readily be sold. That leaves 50 million shares that exist. Generally, with most companies, and GME was no exception to this, those 50 million shares are held in street name. Josh, neither you nor I, unless we do this one step I'll mention in a second, own any of the shares in our brokerage account. Rather, what it is, they're held in street name and we're beneficial interest in it. The entity that owns this goes by CD, stands for Central Depository, which I think, as I poorly understand it, is a tentacle offshoot of the Depository Trust Clearing Corporation, the DTCC. The DTCC and its sister companies, such as the FICC, the Fixed Income Clearing Corporation, the OCC, the Options Clearing Corporation, and a few others, basically guarantee settlement of whatever equities or securities, bonds, whatever you're trading along the way. So the real play for GME right now is for everyone who believes that there's something there, particularly if there's a short interest that hasn't been adequately disclosed, to go through and directly register your shares. So what that means is you go to, let's say you own 100 shares of GME. You basically say, hey, listen, broker, I use Fidelity, for example. So I told Fidelity, send these shares, my 100 shares, back to the transfer agent, computer shares in this case, so that can be put directly into my name. This takes out at least 100 shares of that 50 million that can otherwise be lent out or rehypothecated ad nauseum by DTCC and the various underlings that they have. So essentially what you're doing is you're pulling collateral out at the base of the pyramid, and that's kind of going to be, I think, an interesting play to see if it starts to squeeze. But let's not get too ahead of ourselves, and we're kind of getting a little long in the video. But the point is that an underreported short interest exists, and the way to force the DTCC ultimately to close out the short position or to force the shorts to cover is to directly register shares in one's own name. Because if there's, let's say, 50 million shares that are open, and let's say there's 100 million registrations that come in from computer shares is like, what the hell? This doesn't make any sense. And then they could go to tell GameStop, we've got a problem. And that gives GameStop and computer shares the authority, or the, should we say, the legal firepower, I think, to fire back and tell them, and that is until DTCC, hey, listen, you need to do an audit, you need to force people to close out. And of course, that's going to be a interesting time on that front. Did I say it right, Josh?
So, yes. We have a little thing going on because if you've been watching, I'm more of a boomer, and at least in my trading style, I'd say
boomer on the doomer, just so we're clear.
Yeah. And so what do we have going on right now? Justin has given me some GME shares, and what are we doing with them?
Well, so my theory is that I think there's something to this, and I particularly want to see what happens when you are forced to hold those shares, because there's not a lot of shares, but there's just a few. And my target for GME, which I kind of reached up my backyard and pulled out, about 30 million per share. So we'll see if we get there. Yeah,
but we will.